Have you ever felt frustrated when a trade goes wrong, or thought, if only I had waited just a bit longer, things would have been different? Let me guess. You've probably lost a lot of money at some point, and you're wondering what went wrong. Well, here's the thing. The real reason most traders fail isn't because of their strategy. It's because they can't control one key thing, their emotions. Today, we're going to dive into the psychology behind Forex trading and how you can stop letting your emotions run the show. Stick around because by the end of this video, you'll have 5 powerful rules to help you stay cool, calm, and collected when you're trading. 1. Relatable problem: the struggles of impulsive trading. I know many of you are probably here because you've been there. You spot a great opportunity, the market's moving, and you just dive right in. Maybe you're excited, or maybe you're thinking, I've got to catch this move now. But here's the thing. Trading on impulse is a recipe for disaster. I've seen it time and time again. You jump in when the price is spiking up, and everything seems great. You make a quick profit, but you get greedy. You think, it's going to go higher just a little more. And before you know it, the market reverses, your profits turn into losses, and you're stuck. Does this sound familiar? Yeah, I get it. The emotional roller coaster of trading can be intense. And guess what? You're not alone. In fact, you're in the majority. 95% of traders lose money for exactly this reason. They don't manage their emotions properly. But I'm here to tell you, it doesn't have to be this way. There's hope. 2. Introduce the key concept, the importance of patience and strategy. So, how do you get out of this cycle of emotional trading? The key is patience and having a solid, rules-based strategy. Forex isn't a get-rich-quick game. It's a business. And just like any other business, it requires strategy, planning, and yes, patience. When you're emotionally invested in a trade, you're not thinking clearly. You're not following your strategy. You're following your feelings. But if you have a system, a set of rules you follow every time, it removes the guesswork and the emotional decision-making. Actionable advice: how to control impulses and trade strategically. Let's break it down into steps. The first thing you need to do is slow down. When you spot a trade setup, don't rush into it. Take a moment, breathe, and ask yourself, is this part of my plan? Does this trade meet my specific criteria? Think about it. You've done the hard work to develop your strategy, right? You've tested it. You've practiced it. So why would you throw that all away in a moment of excitement or fear? I want you to get a piece of paper and write down your trading rules. These are the things you'll always check before entering a trade. For example, if you're using a moving average strategy, you only take trades above the 21 SMA for long positions and below it for shorts. You don't enter unless other conditions align, like a confirmation candle or another indicator backing it up. The goal is to make sure every trade you place is based on logic, not emotion. 4. The consequences of impulsivity: emotional, financial, and psychological costs. When you trade impulsively, you're not just risking your money, you're risking your mental and emotional well-being. Each loss chips away at your confidence and makes it harder to stick to your rules. And worst of all, it can lead to even bigger losses when you don't step back and reassess. Imagine you're gambling with real money. That's what emotional trading is like. You're hoping that the market will suddenly turn in your favor, but in reality, you're just reacting to short-term price movement. You might feel a rush, but it won't last. 5. Personal example: the power of a plan. Here's a quick analogy. Think about starting a new business. Would you just dive in without a plan? Would you go into it without knowing what your goals are, how you're going to achieve them, and what resources you need? No, you wouldn't. Forex trading works the same way. You need to treat it like a business. You need a solid plan, a strategy that you can follow step by step every time. And while it might take time to build your patience, trust me, it will pay off in the long run. 6. Solution and positive takeaway: patience is a skill that can be learned. Patience isn't something you're born with. It's something you develop over time. Each time you resist the urge to jump into a trade impulsively, you're building that muscle. Over time, you'll start to feel more comfortable with waiting for the right setups. And let me tell you, once you've learned how to control your emotions, trading becomes a lot less stressful. Your mind is at ease because you know you're sticking to your plan and not acting out of impulse. The results will come, and when they do, they'll be more consistent. If you found this video helpful, make sure to leave a like, and don't forget to hit that subscribe button. Also, I'd love to hear from you. Drop a comment below and let me know how you manage impatience in your trading. Do you struggle with emotional decisions, or have you already found strategies to stay calm? Remember, successful traders aren't the ones who rush. They're the ones who have the patience to wait for the right moment. Keep learning, keep practicing, and happy trading. And with that, you've got the foundation to control your emotions and build a strategy that works. Stick to the rules, trust your process, and the profits will follow.